Okay, folks, welcome to Sunday Night Futures Live. We are going to be talking about the structure of the market, why it is moving up so ruthlessly, why the Qs close at all-time highs on Friday, and how we're seeing some underlying weakness that you can't capture when you're looking at the headlines. You really need to dig down into the charts, and that's what I do. I'm kind of a nerd when it comes down to it, to understand what is driving the market, and do we have any bearish divergences that are signaling that, you know what, we may have a problem here, maybe not today, maybe not tomorrow, maybe not next week, but in a few weeks this could become a problem if it continues. So we're going to talk about that. We'll talk about the driver of this market, and of course it's the government, and we'll talk about how they're doing that. And first, please like, subscribe. You know the deal. The futures action, you're looking at the NQ. This is the NASDAQ 100. We're seeing an up open here. That, however, this is a 5-minute chart, NQ. I don't know what I just did there. Let's fix that. We'll come right back. You're seeing a little bit of selling pressure move in here. Thin volume. You can see how they moved it up. It remains up, but it's given up quite a bit of its gains. I want to set up an alert here to identify if and when we do put in a new higher high on this session. And let's identify a support level of worthy of a defense being made. And if it fails, well, then we could see lower lows here. So let's set that up and we're good to go. Okay, let's move it on. Let's talk about the ES, NASDAQ, E-minis. Looks like similar price action here. We opened up. We remain up, to be fair. But we're seeing a little bit of selling pressure move in here on the E-minis. Let's take a pause here. Let's let everything settle down. Let's go to comments. Let's say hello to folks. Oh, here we go. Talent audio is good. Thank you for that. I appreciate that. And we are recording tonight from 1080p. 1080p. We were 790, now 1080. Franklin, good evening, sir. George from Quebec, welcome. Mr. Sean, good evening. Tim, welcome. Pat, hey, Bob. I hardly check text, pal. I'm terrible when it comes down to text, so I'll check and I'll send you a shout out. I don't get alerts on my phone to let me know I have text. I think I shut it off intentionally. And I apologize for not getting back to you if you send me a text. TF Hatter, hey, Bob, hello to you, sir. Thank you. I appreciate that very, very much. Lee Cable, everyone, I think the music is about to stop and the party will end. Well, August is typically a flat, benign month, especially for the NASDAQ, and September is one of the worst months out of the year, so we'll see. Why is my mouse giving me problems here? Always when I'm live. There we go. BMNR did okay on Friday, up almost 65%. Congratulations. All my options expired worthless. We'll sell again. Isn't that great? Options expiring when you sell them. Love it. Good for you. Congratulations. Awesome. I love the option selling business. All right, let's continue on here. Let's take a look at the small caps. Small caps are doing well. Relative. They're off the highs like the rest of the larger cap names, but holding up better. Let's go back to the NQ for a second. NQ still under some pressure here. Now, this resistance level here in purple, we closed above that. You can see we had again, this is only a 5-minute chart, so we closed above it. Final few minutes of trade. You saw the buying on Friday. Good stuff. We did a retest, follow through, and it held after hours. Now you're seeing some pressure. There weren't any headlines to point the finger out if we see weakness here. So I'm not expecting some grand sell-off here in the markets overnight. Let's take a look at the mid caps. Mid caps holding up well here. Very well. I mean, this looks like they want to go up higher. Let's take a look at the 10-year yield. The 10-year yield reversal. Oh, look at the gap up here. Interesting. 10-year yield gapping up at the open here. And that could be the reason why you're seeing some pressure on equities coming off of their highs. There was a big rebound last week. Let's go to the weekly chart of yields. You can see it came under pressure here, broke down below that 21 period EMA in orange. So the question is, we are in a downtrend channel. Here's your upper band, here's your lower band. But this gap up threatens to take out the highs of last week. So do we put in a higher low? And if we do we break out? And do we break out above the highs of, when was this? Highs of July, the week of July the 14th. So something to watch out for. And this comes on the heels of the Federal Reserve is anticipated to be cutting rates. I'll go to the new percentage probability in September by a quarter basis point. And last I looked, it was almost 90%. It was above 90% mid last week, and then it pulled back below 90% by Friday's close. In fact, by Saturday, it was still the same. Lee Cable, looking at some charts and seeing signs of a 10 to 15% drop coming soon. Share your ideas. What are you looking at? We'll bring them up if they're something that is of value, which I'm sure you have. We'd love to share opinions here on both sides. We're bringing back to American society something that's been lost, and that is critical thinking, listening to both sides of an argument and arriving at an opinion. Let's go back to let's go to currencies. U.S. dollar, let's go bring up the Dixie, was very weak last week. This is this week's price action. This remains a weekly chart. We're going to drill down in a moment. But here's last week's price action. We were rejected now the week prior to last at the declining 21 period EMA. Last week, we didn't tap it. We were higher on the week. We closed lower. The euro did very, very well last week. Japanese yen did a bearish reversal bar. And at current, they tried to spike the dollar during this trading session. Look at that. Oh, my God. Look at that spike. Look at that spike in the rejection on the dollar. That looks almost as if it's a bad tick. You got to wonder. And this is not a brand new contract either. And this is an index. It's not even a contract or a futures contract. So there are no contracts to be had on this chart. I mean, you got to, that's an anomaly. I have to wonder whether or not that's a bad tick. Let's take a look at the competing currencies, euro, yen. Euro first. Again, the euro had a very strong week last week. We are down at current fractionally. As for the Japanese yen, moving up at the open here fractionally. last week. We saw a bit of a reversal bar. Yen, this is a weekly chart now. Japanese yen broke the lower band of this trading range back here the week of July the 14th. We've been holding no new weekly lower lows since then. And now we're flirting with trying to recapture that support. In fact, we recaptured it here the week of the 28th, failed to hold it last week. So there's a battle going on here. So what I want to do is I want to know if and when we break out to new weekly higher highs on the yen, because that puts at risk the yen carry trade. So we're always watching Japanese bond yields and the currency. And there you have it. All right, so that's currencies. Let's stick with it. Let's go with Bitcoin for a moment. I know it had a really good weekend. Here's a 15-minute view. Beautiful price action here on Bitcoin, up 2.19%. We began bull operations last week on XRP. That was down when I last looked at it. Where is it? XRP. I got to learn the symbol for this thing. XRP. Where is it? Here we go. XRP. Duh. Okay, XRP gapping down here, nearly 5% at the open. It had reversed last week. This is last week's price action. So I really like this setup. Yes, we're opening down right now. It doesn't really bother me. The way I look at this chart is that what we are doing is we're setting up for a pennant formation, and in all probability, we're going to move up a lot higher here on XRP. So we remain very bullish, and we'll accumulate more and more. Now, that's XRP. So we did crypto. Let's check out energy prices, beginning with crude. Crude had a very rough week last week. Now we are seeing an open on crude down 0.41% at current. We were lower. We're off those lows. So, you would think that if GDP was so strong that we would be seeing strength in energy. We're not. Natural gas gapping down here 2.34% off of its lows. Let's check in with the commodity space. Gold gapping lower here at the open. So for whatever reason, on Friday afternoon, we moved lower on gold reversal bar. So really what you're seeing here is, because the gold closed at, I guess, 12:30 Central Standard Time, and it moved lower after hours. All you're seeing is the calculation of gold factored into the opening price action here. So really not a gap lower today, but will move lower after hours on Friday. Now, I see a base being formed. And I can make the argument, now they're taking it up higher, I can make the argument that we're seeing a higher low and that we could move up higher. Let's set up an alert here. Let's see whether or not we put in new higher highs. I mean, with the dollar moving lower and government spending going like this, I'm going to go to a chart of M2 money supply in a moment. It's shocking. It's shocking the amount of money that's being pumped into the economy. And I think gold is looking really, really bullish here, and that this pullback is an opportunity to buy because they're doing absolutely nothing to stifle the spending in government. I mean, not by a factor that's going to make a real big difference. I mean, they're closing certain agencies, they're laying off people, but it's really just a drop in the bucket if they don't tackle the the Social Security and the ridiculous spending, the discretionary spending that they do. They can cut government all they want. It's not going to make up for the deficit spending. So let's take a look at silver. Silver, I'm very bullish here on silver. We broke out. This is a weekly chart. We broke out last week out of this wedge formation. I think that we are putting in higher highs. The silver mining stocks last week did great. Gold mining stocks did great. Let's bring up SILJ. These are the silver mining stocks. You can see the move from last week. Huge, massive week. These are under-owned. Gold mining stocks too. Let's bring up the GDX. Huge week last week. Multi-year highs here. And nobody wants them. Okay. Let's take a look at platinum. Not much happening here. Opening up. We have a position in palladium. That pulled back last week. And we're opening down yet again about just shy of a third of a percentage point here on palladium. I'm very bullish on these names. You really need to look at the monthly charts, weekly charts, not the daily charts. These are breaking out of a macro base. And you need to expect backing, filling. You can see how busy this chart is because we've been watching. We owned it back here, sold it up here, dropped back down into a beautiful double bottom setup, and now we're breaking out. We've already broken out above the pivot point, but failed to hold it. We hit this resistance level here. No new weekly lower lows yet. And we'll be talking about UNH stock. This kind of reminds me of UNH stock, the performance it put in last week. So we will be talking about UNH in a little while. I know there's a lot of interest in it. So stay tuned. Okay. I think that's it. Let's check out volatility and what that's doing. It's been doing a lot of nothing except for going down. It is up at current. No new weekly lower lows. I don't think so. No, not yet. I don't think. What's the low of last week? 1673. What's the low of this session? No, we did. New weekly lower low. 3 bips. So they gapped us lower. Let's see if we start putting in higher lows on volatility. Let's leave it off. I want to check out agriculture. Agriculture is always interesting to me. And I saw a few charts that came out over the weekend. Rice making multi-year lows. Here's rough rice, ZR. So under a lot of pressure. Let's check out ZC. That's corn. Under a lot of pressure. So it looks as though the food inflation is coming in here a little bit. ZW, which is wheat. Now, the big problem for consumers is protein. So let's take a look at live cattle. And we're just off of all-time highs on live cattle. They're going to be adding more stock to the U.S. herds. But they're not going to be able to make it to the shelf, slaughter them, the slaughterhouse, I should say, until 2026 at a bare minimum. So And if they're going to get them if they're going to birth them and then have them at the slaughterhouse in 2026, it tells me they're going to be using a lot of hormones. So that's not your high quality product. So live cattle still expensive, but we may be seeing some weakness here, and we'll be looking to short this at some point in time because there's going to be a lot of money to be made, but now is not the time. The cable I've a mix of seasonality trends on the S&P 500 and NASDAQ after last week's close. Yes, we're going to be going over seasonality on both of those names in a moment. Yes. Plus only 35. Very, very good. Very, very good. Awesome. Very wise. Because that's exactly what we're going to be talking about in a moment. I'm going to be taking a look at breaking down the NASDAQ 100. We could take a look at them as a percentage basis or by count. Either way, it's not looking good under the hood for the NASDAQ 100, despite the fact that we put in all-time closing highs last week. Hearing rumor chatter of rate cuts in September. No. The Fed Watch tool is rarely wrong, and the Jay Powell never wants to disappoint the Fed Watch tool. Simple as that. Now, can it change between now and that meeting? Sure. Sound blast off. Yeah, I saw that on earnings last week. Yep. Gold is nearly 4 years into an 8-year bull market. There will be big dips, but can see gold at 10K by 2028. Okay. Not arguing it. It's the perfect environment. If you take a look at what we're going to, as a matter of fact, we're going to go over a chart of leading economic indicators and how they're going like this, not looking good. And we saw the non-farm payrolls from not this past Friday, but the Friday before, and it was horrific. It was a horrible report, and they revised down the 2 prior reports. So, yeah, I mean, if you have inflationary pressures that are goosing the market up higher, and it could be the tariffs. I saw a study today that 22% of the countries that have tariffs on them are absorbing the tariffs. 64% of the companies are absorbing the tariffs. The rest is being passed along to consumers. That's as of now. Does that change? Well, if the earnings come under pressure, then you're going to see price increases. So sure. And that's inflationary. It's all good. We love ideas. Keep them coming. You will not be canceled, not from us. We'll leave that to the weak, the lower intellect folks to avoid conversation and debate. So that is the opening price action on the futures. Let's just do a quick look over our shoulders on the NQ. Pretty much unchanged here since our last look. Holding. We haven't gone red, so let's put up an alert here. Let's see if we go to new session lower lows. That way we're not staring at it without being notified. There we go. At or we want below. Good. Done deal. Arcade. Don't worry. The next unemployment report will be fake. Yeah, and unfortunately, that's the reality that we've been in for quite a while now. But the markets, they're gonna run off of what CNBC reports, and it's as simple as that. I mean, how many times did we see during the Biden administration a beat on headlines, but the prior 2 reports were revised down, much like the last report? The only difference between the last report and the Biden era reports is that the current month job creation report was bad, as well as the 2 downgrades, and that shocked people. Rightly so. It's all about jobs. And that's why you saw the probability of a Fed rate hike skyrocket. I mean, there was no chance of a September rate hike, except until that report. When Jay Powell was talking the prior Wednesday, there was no reaction. There was no expectation that the Federal Reserve was going to cut rates in September. It was the jobs report that said they need to go, and they're probably behind the curve. So let's get to it. All right, folks, if you're not part of our community here, if you want to start reviewed, you need to be in the community. It's no credit card required, no shenanigans. Sign up, just enter your symbol right here. Popcorn, yeah, who doesn't love popcorn? Okay, so let's get to it. We don't have a lot of, let's go to the earnings report first. We don't have a lot of mega cap earnings that are coming out this week that are going to be, they're not going to be impactful to the market. You know, AMAT is probably the largest one coming out next week that could have any type of influence on the markets. Everything else is pretty much a mid-cap stock that's coming out. Not much on Monday, AMC. Tuesday, the only one I'm interested in is Rigetti. If you're not familiar with Rigetti, that's okay. I'm predicting that right now we're in the AI bubble. The next bubble after this is going to be the quantum computing bubble. And Rigetti is one of the leaders in that space. So I'll be watching this report. Brinker International. That's one to watch because if you're seeing a recovery in employment, one of the first things to recover is the leisure restaurants, your Applebee's, Red Robin. That's another one. They're reporting on Wednesday, so that gives you some insight into the consumer. We have Cisco Systems. I need to stand corrected. They're probably equivalent to, if not bigger than, AMAT. Cisco is not the influential player it used to be. It was the NVIDIA of its day back in the early 2000s and the 1990s. So they report after the bell on Wednesday. That should be interesting. I think one of their C-suite officers under investigation as being a Chinese spy. So that should be an interesting call. Before the bell on Thursday, we get John Deere. We get some Chinese stocks that come out, JD.com. We get some miners coming out next week. Equinox Gold, First Majestic. That's a silver mining trade. So watch that one carefully. And on Friday, not much. Flowers.com. That's about Flowers Foods. I don't think that's flowers.com. So it's going to be a quiet week. So what does that mean? It means that economic data is going to come back into focus. So let's see what the market has in store for us this coming week. On Monday, not much. That all changes on Tuesday when we get the NFIB Optimism Index. So this is the optimism of small businesses. Consumer Price Index. So that's our view of inflation at the consumer level, not the Fed's favorite measure of CPI, but the markets will pay attention to it. Core CPI, that's what the Fed, if they do watch it, will be watching ex food and energy. You have some Fed heads coming out on Tuesday as well, and on Wednesday as well. Thursday, you get the Producer Price Index. That's the measure of inflation at the producer level. Initial jobless claims, which keep ticking up. We get that every Thursday. It's a weekly report. Watch out for that one. The markets are kind of ignoring the limp up. It's not a hockey stick move up higher. It's just a gradual move up higher. We went over that chart on Thursday Night Futures Live. So you can go back and see that there. I don't think I have it up here. Maybe I do. Let me see if I can find it. I don't want to waste people's time trying to find a tweet. So I'll scroll through this as I continue to go through these. I'll use my peripheral vision, and we'll take a look at Friday retail sales, a huge report, very, very important. Then we get the Empire State Manufacturing Survey. That's usually a yawner. Sometimes it matters. It depends upon the severity of the report. If it misses or it beats industrial production, you always want to pay attention to that. Capacity utilization, that's the measure of the amount of manufacturing capacity that we have that is being utilized. So that's kind of like a forward-looking indicator about goods that are being produced here. And we have where is that? Here it is. So I went over this on Thursday night. So this is as of 7:25, and we moved up higher measurably during that report, and we could see here how we did last week. Yeah, we came in higher than expected on initial jobless claims last week, not by much. I mean, these are not huge moves up higher, but incrementally, after a while, you take notice of the fact that this is, in fact, what did I do with it? A trend. I mean, connect the dots. As a matter of fact, we have a major breakout here on U.S. continuing jobless claims. I mean, it's clear, it's defined, and it's up. We bottomed out in June of 2022, and it's game on. So something to watch out for, and that's why you're seeing the Federal Reserve, the expectations by market participants. Let's refresh this because it changes. We have a probability of an ease of 88.4%. This is actually higher last week, and it's ticked down some. But the probability of a cut is highly likely. But the problem is it's only a quarter basis point. So it's going to be very, very hard to move the needle. Now, what's going to happen to the U.S. dollar when they do cut those rates and they get the forward-looking guidance at the press conference afterwards, and they start talking about cuts moving forward? Well, the dollar is going to drop like a rock. So if you have leading economic indicators here that are dropping, the Conference Board leading economic indicators drawdown is 17.8%, the biggest since the financial crisis. The LEI fell 4% year over year in June. That's a big move to the lowest in 11 years, the third month in which it has triggered a recession signal. So you have the leading economic indicators going in the wrong direction, jobless claims moving up higher. You saw non-farm payrolls from 2 weeks ago, not wonderful. And the expectation flipped on a switch that the Federal Reserve was going to have to cut rates. The question is this: are they too late? And is a quarter basis point cut going to matter? And I do believe that they are going to cut. Now, valuations of the equity market, with all this as a known, we're seeing some weakness in the economy. It's not headline news right now. Nobody really wants to talk about it because the stock market's moving up higher. But you have valuations. This is the CAPE index or the Shiller PE ratio, call it what you will. 38.45, the third highest level of valuation of the S&P 500 in history. The Buffett indicator. We remain overvalued. This is the total stock market relative to GDP. You are here, nosebleed levels. And when you take a look at a different view of the trailing, this is not the CAPE. It's different than the Shiller. If you ask me what's the difference, I have no idea. I'm not that smart. So this is the trailing earnings PE on the S&P 500. We're at 26.1. We are the second most expensive in history relative to the financial crisis. Price to sales. This one here to me is a mind blower. We on a price to sales basis, we are at the most expensive in history right here, right now, as we begin the new trading week, and nobody cares. I need to stand corrected. People do care. There is selling going on. It's just not being reported. So what's driving the markets up higher besides the retail investor and the algorithms? It's simple, folks. You have Treasury putting more and more bonds on the market to help finance deficit spending. If they stop that, this whole thing, this whole rally that we're enjoying right now gets real fast. So look to this. Look no further than the fact that you have M2 money supply ripping through the ceiling. So it's government spending. They're pumping money like adrenaline into the private sector, and it's going to end. It's not going to end well, but it's going to end. So we're higher now. Think about it. We're higher now than we were pumping money into the economy than we were back during the peak of COVID. So the emergency spending that began back here, like this skyrocket effect, it's never stopped. It took a pause. We went into recession. Remember the 2022 recession? Not recession, my apologies, bear market. And now we're at all-time highs. It's crazy. And now they're going to look. Here's the crazy part. And this is what had to spook the Fed when they cut rates over a year ago now. I think it was September of 2024. Somebody correct me on that. Fact check me to make sure I'm accurate. I want to say September of 2024. They went by a half basis point and they did 2 additional quarter basis point cuts. What did bond yields do? They didn't go down. They went up. That's the long dated maturities. So at some point in time, the Federal Reserve is going to have to step back in. They're going to have to start buying long dated maturities because they have no control. Just because they cut rates next month doesn't mean that the 30-year bond, the 10-year bond, those yields drop. In fact, I would argue that bond buyers are probably going to sell bonds because the globe thinks that we're out of our mind. We have M2 money supply ripping through the ceiling. We're going to cut rates, and we still have inflationary pressures on the economy. The other argument is that you have jobless claims rising, you have non-farm payrolls not looking good, and you have leading economic indicators not looking wonderful. So the Federal Reserve's tool mandates are now, they always have been, jobs and inflation. They're going to have to pick one of the two. And they're probably going to go with the debasement of our currency. And that means they're going to let inflation move up higher to salvage the jobs market. So you could quite very well see, and in fact, last week, let's go to that chart. Last week, you saw here the 10-year yield. It still looks weak to me in terms of momentum. The 10-year yield held support, did a bullish reversal bar. Did we close above the 50 period? I don't think we did. 4.31 is where the 50 was. No, just shy of the 50 period moving average. We get a close above the 50 period moving average on the 10-year yield, which is at current 4.31%. You're going to be looking at a challenge of the highs of July, the week of July the 14th. And if you get that, if we break through there, well, then you're looking at the highs of May, and you can bet your bottom dollar Mid-cap stocks, small-cap stocks will be going down like this if you get longer-term bond yields moving up higher, even though the Federal Reserve is cutting rates, because they are very, very dependent on interest rates, not so much the mega-cap stocks, because they have cash, they can issue debt, they can issue stock, they can do whatever they want to help finance operations. Let's go to comments. BBAI tomorrow. I'm not familiar with that company. Rigotti, I'm familiar with. Thanks, Pat. Lee Cable, this is a controlled demolition of the markets by the Fed. I think the best way to defend yourself, the easy thing to say is to short the market, but that's not easy to do. I think the best way to protect yourself is to own hard assets, whether it be real estate, whether it be gold, silver. Shorting the market is very speculative. It's very risky. So I would go with the safe bet, and that is gold, which has vastly outperformed the S&P 500, despite the fact that the S&P 500 has had an all right year thus far this year. Michael Anthony, welcome. How DD? I'm not following that one, Talon. Bob, how do you protect your 401k in this fund? So simple. I think that you need to be diversified. If you have if you have in your brokerage account the ability to buy ETFs, your 401k, you could buy gold mining stocks. They're quite cheap. You could buy gold, meaning the ETFs, not the commodity. So there is some risk with the GDX. You're probably better off with the Schrock. What is it, Schrock products? GDX does not own a lot of the underlying gold. So if they ever got called to the market, Sprott, SPROTT. I think they have more silver and gold in their warehouses than does the GDX. So if they ever had I don't know how that would work. If they were, I've heard an argument that they might get called on their gold reserves, but that's what I would do. That's what I do. You know that we own gold, silver. We own hard assets. Bob, how long can they continue to pump market money into the system without something imploding? The Federal Reserve is designed to not go out of business. They're not profitable right now, if you could believe that. They're not profitable. They stopped being profitable a couple of years ago. But their goal is to bail out the government and allow the government to be very, 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 very irresponsible, I guess is the word I'll use here. The only way, if there's going to be a come to Jesus moment for the government, it's going to be when you cut rates and bond yields still move up higher. That really spooks the market, because all of a sudden, the foreign buyers are not there, and they're going to rely upon the Federal Reserve to step back in, just like Japan did. The largest owner of equities and bonds in Japan is the Japanese government. So that's the worst case scenario for the United States. No worries, brother. No worries. Michael loves Pfizer. Okay. What else do we have here? So I wanted to talk a little bit about the drivers of this market, and a chart I pulled up over the weekend that was quite disturbing. So you could see that these charts here, you have Google, Meta, NVIDIA, and I guess it's just another NASDAQ. It's the NASDAQ Composite Index. They're all in a broadening pattern, meaning they still have room to run here a bit more, but they're very, very close to resistance. NVIDIA clearly has gone parabolic at this point. Google has more to run. Meta has more to run. So they could, NVIDIA could pull back, and you could still have Google and Meta pick up the slack a bit, along with a few other names, and that'll allow for the NASDAQ to reach this upper band of resistance here. So there's something happening out there that people should be very, very aware of. And that is the fact that this chart here is the SPX, and this is really not what I wanted. I wanted the NDX. Where's my NDX? Here we go. So the NDX here, this is a weekly chart. NDX, NASDAQ at 50. Okay, so what this chart tells you of the triple Qs, how many of these stocks are trading above their 50-day moving average? Now, one would think the fact that we, on the week last week, closed at all-time highs, one would think that you have 75, 80% of these names that are trading above their 50-day moving average. 50%. 50% are trading above their 50-day moving average. So it just goes back to show you that you have too few stocks that are trading, too few stocks that are driving the market up higher. At some point in time, you're going to get profit taking on those names due to the fact that, hey, the institutional investor is going to say, I'm not going to get a better price than this. Even if I do, I don't want to take the risk. I'm going to make some profits real. So if you take a look at names like Microsoft, which is the largest component of the triple Qs, we look like we're topping out here on Microsoft. You go to a daily view, you could see last week was not a good week for Microsoft. So if we begin to see Microsoft and NVIDIA move lower, this market's got a problem. What bailed out the triple Qs last week and allowed it to move to new all-time highs was Apple. Apple was up 4.24% in one day on Friday. On the week, it was up 13.33%. That's a huge move for Apple. Monthly chart. Up on the month, nearly 10.5%, and it looks like it's probably going to go higher. So it's all about sector rotation into individual names of the triple Q to keep the party going. Apple, Microsoft, NVIDIA, Meta, Google, those names. They're going to keep rotating those names to keep the party going. So just beware, because the underlying structure of the NASDAQ is not as strong as one would think. Again, 50%. Look at this. We peaked out back here. Right here. With 85 of the companies out of the 100, I think it's actually 101 companies in the NASDAQ 100, at or around June the 10th. Ever since then, lower highs, lower lows. So the internals, the mechanics of the NASDAQ 100 are weakening, not strengthening. Bob, what are your views on the U.S. government repricing gold held in the vault at $42? Is it currently valued as? It would be great for me. You know, it would be great for a lot of people if they did that. Question is, would that be the top in gold? It probably would be. I'd probably sell the news on that move up higher. Because knowing President Trump, it would be a big number, a really big number. Apple up 13% last week. Palantir up 2. Yeah, Palantir is another one. They're going to make a poster child for the triple Qs. Jody, welcome. Johansson, I can't say your last name, but it's interesting. Do you know if 15% tariffs on NVIDIA and AMD will have any effect on their earnings? With NVIDIA, probably not. They have pricing power, so probably not. AMD, probably to a lesser extent. That stock has not been a real head turner of late. Maybe it's changed. I don't really follow AMD all that close. Yeah, it's bounced back since the last time I looked at it. It's been a while. You can see how it came under pressure. So AMD, nice rally since April, but still, lagging the rest of the market. Or I should say the triple Qs. All right, let's do some chart requests, and we will call it a night. What do we have here tonight? I want to go over UNH. We don't have much to go over tonight, which is good. So let's start with UNH stock. So I had done a video. That's the wrong chart. I had done a video, not this weekend, the prior weekend. I actually did do a weekend video on Saturday, and my software, it just skewed the audio and the visual. So I just trashed it. So UNH, I had mentioned that my ideal situation going into last week was that we would get a washout, a retest of one of these support levels here in yellow or here in green, and then a bullish reversal bar to close back above them. To me, that would have been the sign of a bottom. So the other possibility was that we would gap up and we would get what you call is an inside week. No new high, no new low. That's what we got. So I think that we do have, at least in the short term, a bottom here on UNH. We had good volume last week. And let's go back to that weekly chart for a moment. The weekly chart, what's interesting here is that, and by the way, we're using Trend Spider, 35% off, automated trend lines. If you guys don't know how to do trend lines, just let the computer do them for you. There you go. Click of a button. So what we did here is something that's kind of akin to what I was looking for with a washout. Let's bring this down a little bit. Okay. So on UNH, we had a washout this week, the week of July the 28th. Then last week, no new weekly low or low. And what did they do? They closed it back above the prior low. This is what you call an undercut double bottom. What I suspect is going to happen this week is at some point in time this week, we're going to retest 248.88. If you're not long of it, you may want to think about nibbling at that price point. Determine whether or not this is a good trade for you. Know your stop losses, etc. Me, I own it, and I will be holding it for the long term. So I like the close on the week. I like the volume. I like the fact that we recaptured prior support. Remember, back in July, a lot of traders, including me, we stepped in. I bought right down here. Nobody wanted it. It was a bloodbath. RSI was like, I don't know, 11. It's crazy. And then we enjoyed this rally up higher. Now, I sold half of my position above 300. Now, I want to add more, but I want to make sure that we begin to put in higher lows and higher highs. And I love the fact that we recaptured prior support. This, to me, is very, very bullish. Very, very bullish for UNH. And going back to that weekly chart, if you take a look at the healthcare provider ETF, it did the same exact thing. So we have a validation of UNH's price action vis-a-vis the ETF. not putting in a new weekly lower low, and reversing to close up on the week. Great stuff. And we held support. Beautiful. I think we have a bottom here. And take a look at the volume. This is not mom and pop buying 100 shares of IHF. They don't even know it exists. This is institutional accumulation. They are stepping in and they are buying the bottom here. So the reason why I own UNH and not CNC, which I do own, I've been building a position here, and I do think it's probably going to move a little bit lower for the longer term, is that UNH pays nearly a 4% dividend. So I get paid to wait. So I'm good. And CNC does not pay that dividend, nor does Molina, which I think Molina may be putting in a bottom here as well. Similar to UNH and the IHV, no new weekly lower lows last week, I believe. Actually, no, we may have. We did put in a new weekly lower low, but we held support. We were closed up on volume, RSI now flattening out and hooking up. So it looks as though the worst has passed for these names. Does that mean you go jumping in with both feet on Monday? No, you're going to have plenty of time where you're going to get backing and filling. You're going to think it's going to break down to new lower lows. It's just going to happen. So nibble, nibble, nibble. Get more aggressive once you start putting in new weekly higher highs and higher lows, recapturing support levels, consolidating, and then buy more. Let's take a look at Lilly. Lilly, I know they reported last week, and they did not have a good earnings report. Big volume on the week last week. It's in a bear market. I mean, and last week was the beginning of the next leg down. So I see no reason whatsoever to go buying Lilly right now. I mean, I think price target number 1 is 603.50. Price target number 2 is 561.49. So I think what they may do, since they closed it down below this lower band of support, I don't know what the valuation here is. So if it's a cheap valuation and people see value here, then if you get a gap up and they close it above this lower band of now resistance was support, if they gap it and close it up there by next Friday, then that could very well be the short-term bottom and they rally it back up. I'm getting the vibe that that's not the case. I think they're going to probably rally it back, try to recapture the support level. It will get rejected. And I'm basing my opinion upon the fact that I see institutional distribution here. This is not mom and pop. What's going on with this mouse again? I think the battery's dying. This is not mom and pop buying or selling 100 shares of Lilly stock. This is institutional distribution. So you don't want to get ahead of these guys. Let it flush out, just like with UNH. Let it all flush out. Let's go to the daily chart. Yeah, we broke through Fibonacci retracement levels last week. 608 is the next price target on the fibs. You maybe get a bounce there for trade. So unless you're going to short this, I wouldn't be a buyer right here, right now. Would I buy a bounce for a short-term trade? Sure. But I would need to know the valuation, where it is historically, and make that determination of how long I'm going to stay in the stock. Do I just ride it for a leg up and then sell it at resistance? It all depends upon the valuation. And in fact, forget about the valuation. What's going to happen here is very similar to, let's bring up UNH. Right? UNH, classic case of a double bottom. Let's get rid of this. Let's clean it all up. All right. So here is the leg number 1, right? This trade here, you buy it for a bounce because you need to make the assumption that it's not going to be Yeah, my battery's dying here on my mouse. You need to make the assumption it's not going to be a V-shaped recovery. You're going to need to assume it's going to come back down and retest some support levels. If not, even like with UNH, put in an undercut double bottom. That's what happened here. So for Lilly right now, if you're going to buy it off of a support level, remember UNH stock, sell it at resistance, sell it when it stalls, watch for that retracement back down. You get a higher low or a double bottom retest, then you can step back in. So that would be my play with Lilly on Friday. You know, you're going to get a bounce here soon. It's trading into its third standard deviation Bollinger Band. If you're not familiar with what that is, folks, you're not supposed to be there, and that's in red. So we're going to bounce here at some point in time, or at the very least trade sideways and then move lower. Big volume on Wednesday, Thursday, Friday. UNG. I'm not loving UNG. Seasonally, not a great time of the year. In fact, let's go over seasonality first on UNG. It's pretty bad. When your second best month out of the year, you're only up 47% of the time. So let's narrow this down. I mean, natural gas has been in it's no longer technically in a bear market, but it's been weak for a long time. You can see how August has improved some year. Seasonality, not wonderful for UNG at all. Let's bring it down to a 10-year time frame. So you can see how August is the best month out of the year for natural gas. Here's the weekly view. This is last week was supposed to have been a very good week for UNG. I don't know how it did. We'll take a look in a moment. This coming week and the following week, not wonderful. 3 weeks from now, awesome sauce. I'd be looking at the week after next, buy the weakness and enjoy the rip up higher. As long as the setup is there on the chart. You can't just simply base it on seasonality. Weekly view. So we closed down on the week last week. We keep hugging this lower band of support. We flashed a doji star formation on the week. We opened down already. Let's take a look at how we're trading at current. New weekly lower lows already this week versus last. So we could be setting up for a rally here. I like the doji star formation. Volume was still pretty heavy. Let's go to a daily view. Take the trend lines off. We closed below a retracement level on the fibs. 12.12 on UNG looks very interesting as a support level. Daily view. Not a great day on Friday. Closed lower. It looks as though it's probably going to drift lower here. Down volume has been very, very light on UNG. So we may just drift lower for the next couple of days. Remember, seasonality gets more favorable going out. You want to put on your trade 2 weeks from now and then watch that third week for perhaps a rip, and that it will rip. Excuse me. I don't know if it's going to rip that week, but when it does rip, natural gas, they call it the widowmaker for a reason. It's the most volatile commodity out there by far. Silver probably being the second most. So that is UNH. Sean, ExxonMobil. That's a good one. Weekly view. You know, oil prices are weak and they appear to be getting weaker. We broke weekly support. We are in a trading range. There's your wedge formation. Big down volume last week. I'm not a buyer here. I don't see the setup. We broke support. It's just hovering in the middle of a trading range. I think that if you get down to, let's call it 100, if you see par, $100 per share, maybe a little bit below, I'd be a buyer. Friday's volume rolled in a little bit higher, RSI drifting up higher. So I still don't like the setup, though. Still don't like it. Let's throw some lines up here. It's holding a support level, but I don't see a compelling reason to buy right now. Here's the 4-hour view. It's just a lot of chop, not a lot happening here. Every time it rallies, they sell into it. So, I'd rather be a buyer into historical support and when there's blood in the streets. And I think we may get that with the oil stocks if oil continues to drop like it is. Remember, leading economic indicators are not supportive of oil. If you hear of OPEC cuts in production, if you hear of Permian Basin or fracking here in the States, cutting back on production, that'll put a floor under price of oil. But it just may make Exxon dead money for a while until a recovery and we begin to move back up and demand picks up. And that, my friends, is it. Don't forget, folks, if you're not currently a member of the Contrarian Trader 14-day free trial offer, and I give away TrendSpider silver and gold level members, take advantage of it. If you're not ready, that's cool. Get a 35% discount off of TrendSpider. Use the link below on YouTube, link above on Twitter. Use my discount code CON35, CON35. And to help this get more attention, these live streams, if I could ask you to click the like, subscribe button, and notification bell, get notified when we go live. And by the way, link below also, if the Qs do weaken up, the triple Qs, if they weaken up, I have a listicle of all the support levels that I like. It's free. It's below. Take advantage of it. That's it. No charge. Thanks all. Really great being with you. Sean, you're very welcome, sir, and thank you for being here. Can you please move the QR code from the top box? How do we? All right. I don't know how to do that right now. Next time around, I'll have it gone. I agree. I'm waiting for ExxonMobil. Yeah, I think it's best just to wait for a washout here. SLB has been making decent moves under 200. Okay. Pat, same to you, my friend. Best of the family. CH, awesome stuff. Thank you, CH. Thanks for being here. I appreciate that. You as well. You as well. Thanks, all. Have a great night. Be well. Have a profitable trading week. You're welcome, A-Person.